Aloha, welcome to Java. Thank you for joining me again. This is for Thursday, December 28th, 2023. Last couple of trading days for the year. So we've got a ton of things going on. Want to get right into this. So we're starting out with, of course, market risk indicators still on the low side. We've got basically the relative strength of the US dollar and the 10-year yield. They both retraced and came down. This is positive for stocks still. So we've got stocks currently in the green. However, we've got the volatility index dropping, signaling a go sign for purchases, basically. We've got gold under a slight bit of pressure, as well as oil. I expect those to recover possibly before tomorrow. So we've got the futures kind of mixed at the moment. Want to go a little more into the sentiment because overall right now it's mixed. We've got a calendar, we've got a couple of more reports coming out today as well as tomorrow. However, it's still thin volume and light trading. We've got a lot of traders that are basically just staying out until next year, which would be next week. So the larger things that I'm watching along with these indicators is the yield curve inversion. So the timeline on this, I want to let you know, is not so much today or tomorrow, but it's more in terms of weeks, couple of weeks, month or two. So the reason I'm watching this is because when this starts to invert and go back to quote unquote normal, instead of being inverted, that is going to be a major sign of the large economic downturn incoming. That normally, historically, is what happens right prior to depression, recession, whatever you want to call it. So by design, they're going to try to keep this into a slow reverse rotor mode. So it will crash. They cannot keep it from it at that point in time. However, they'll try to manage it, as they're saying, into this soft landing. So I think that they're not going to do any cuts until the employment numbers change. Basically, unemployment has to rise quite a bit more before they look at going into that. So we still have continuation right now, but sentiment is changing a bit. So let's talk about that. We've got the low volume, but there is a shift incoming. And what Goldman is saying is that traders that had fueled this stock market rally are now nearly tapped out. So basically, the large money flows that we've been watching coming in these last few weeks of the year, basically the Santa Claus rally is near its end. So possible continuance through today, but there will be more volatility. And then we could look at this shift to where it's going to have that difference in reverse, basically. So we've got gold holding gains. Now, this is not financial advice, but basically, gold is at a point right now where it's in major support. And I think it's a good play and a good buy. It could come down, as always, but I think we're at a good spot right now, as well as finally, I'm looking again finally at gold miners, the major ones, Barrick Gold, Newmont, of that nature. So, along with gold, we've got the digital gold. If you're so inclined with cryptocurrencies, we've got a problem here, and that is with the ETF. So, as it's coming out, it's pushing up the price of Bitcoin, but it could result in millions of unbacked Bitcoin. So, really, the ETF is derivative. So, if they're not purchasing solid Bitcoin, which is a finite asset in the back end, it could result in basically, as they say, unbacked. If they do purchase it, this is going to cause uh, a spike in the price because basically it is a finite asset. So we'll watch this. Could be a sell the news, buy the rumor, sell the news moment, but I do expect it to go a bit higher. Moving on to mortgages, because there's a lot of talk about how we're going to have more home buying coming in here because mortgage rates are dropping. This current mortgage rates, I think the magic number that everybody's kind of looking at, they talk about this, there isn't really a magic number, but I think more approaching the 5% is where it will become a little more key, a little more affordable. So a lot of this, a lot of this hype that they're talking about is actually refinances. And we spoke about this a little bit the other day, but home equity lines of credit, basically pulling all of the equity they can out of their houses while the prices are high, and then also trying to refinance. And Michael Bardonaro goes into the details, and I agree with him on a lot of the underlying between this. And he goes into it a little more detail. Try to leave a link to his video because I get a lot of questions about real estate. I think he hit the nail on the head. His video is quite a bit longer, but I think it's worth a watch. And basically, what's going on is as people pull out this money, the great financial crisis, they walked away from their loans. And we could be on the edge of that as well. As people are getting desperate, they're cashing in their 401ks. They are, as the unemployment rises, I think this major risk, along with the commercial real estate, which is also tanking. So this is direct from Fitch Ratings. They're talking about the default rates to rise in the United States and Europe with weaker growth. So basically, this is targeted toward the business sector and the commercial real estate sector. So on the trade side, we've got China. Now their economy is facing some headwinds as well. However, they are unveiling their electric vehicles and now they are competing even with Tesla. And on the European side, we've got BMW and Mercedes are looking to shift their electric vehicle production to China. So when the industrial, the last time that the large growth happened in the West, particularly in the United States and Germany, it was on automobiles and steel. And so what is going on here is we've got auto manufacturing from both the United States and Germany shifting to China, and the United States just sold their largest steel producer to Japan. So losing on the manufacturing side, are the GDP of the United States is suffering, and they're talking about how high it is. That's really on the war machine. So, moving to energy and oil, we've got this is huge. So, I put these two together on purpose because I don't see how they don't see this themselves, which tells you that this is by design. So Russia's oil supplies dropping to the European Union 90%. And this is due to Western sanctions. So they're doing it themselves. The elites are doing this on purpose. And then the result of this, European gas prices surging. So they say right in here that it's due to mostly sanctions and then also what's going on with shipping supplies and the wars. So we've got the war machine basically pushing these sanctions, raising prices on themselves, and then they all talk about how they're shocked with what's going on here. So moving to the war front, the money that's going over there, the West, meaning US and Europe, quietly shifting the Ukraine strategy, basically meaning they're not getting the funding that they used to. It's just moving to Israel because it has become a very unpopular opinion, and the administration is looking at selection cycle is an election year. So we've got North Korea, Kim Jong-un, ramping up preparations, war with US. This includes nuclear. They're also making deals and agreements to supply more with Russia. So we've got all of this ramping up of the war machine and a lot of distraction going on. We've got China talking about regional alerts with the US military stepping up their forward deployment. This is in South China Seas over Taiwan. And then we've also got Russia warning Japan and the West because Japan is providing Patriot air defense systems to Ukraine by proxy. So this is the Russia war by proxy. And then we've also got a war going on with Iran by proxy through the Israel Hamas thing, as you know. So we've got Iran talking about um, basically there was an assassination of one of their senior commanders. They're quote unquote promising swift response. So this is all kind of headwinds. In the background, we've got Russia allocating 6.5 ruble credit line in direct trade to Iran. So this is the real war going on in the backside. It's a currency war. So we've got the BRICS nations, the expanding of this. So who is paying for all of these wars? The middle class. So the Internal Revenue Service now sending out reminders, notices of unpaid tax bills. This is to individuals. And if you don't pay your tax bills, they are going to remind you that you can wake up one morning, see your money taken out of your account. So, and this is direct from IRS overseer. So they put $60 billion into funding over the next 10 years. This is going toward enforcement to make sure you pay your taxes to fund these wars that you never voted for. Maybe you did, but I didn't. So we've also got them targeting small businesses because they're also, in addition to going after individuals, they are strongly encouraging business owners who utilized an employee retention tax credit to pay it back. So a lot of things going on. This is the direct link to that article. I'm going to try to put it in the description as well. Hopefully it will work. So now for lava updates. In this whole larger picture, they do have an agenda. They're trying to erase American history and identity as evil, taking down more statues. And if they can basically continue this, it will erase your identity, erase the culture of America, and they can put in place whatever they would like. We've also got, this is one of my top evil dudes, Yuval Noah Harari. So he's a WEF guy, also Davos guy. And basically he's talking about how artificial intelligence will create useless class. And he is an advisor to the World Economic Forum on this. He's talking about a vast educational system to retrain the population because it doesn't like free thinkers. So anyway, not going to get into any more of that at this moment. And then I wanted to bring up this story about water, power grab, because they get to the bottom of it. Basically, they're talking about the world's driest inhabited continent, which is Australia, making a few big investors very rich. And that's really what's at the bottom, is they are basically taxing resources and using it for control. So with that, getting on to the trading day, wish you all a green trading day. Just a wonderful day in general. Until I see you again, my friends, stay free.